This is Asia Times Deputy Editor David Goldman speaking to you from New York City the evening of September 23rd. Well, despite fears of a financial Armageddon due to contagion from China's Evergrande property disaster, U.S. stock markets, and in fact global stock markets, had the best two-day rally they've had since May. And the market has figured out that this is hardly a Lehman moment. In fact, it's the kind of moment the U.S. markets would have had if the Federal Reserve had had the wisdom to pop the property bubble in 2004 when it was just getting dangerous, as opposed to 2008 when it virtually ate up the world banking system. Chinese authorities stage managed the Evergrande crisis. They set it up well in advance, first by creating so-called red lines for debt ratios for property companies, and secondly, by imposing property curbs on lending. So the rate of lending to the property sector had already tapered off considerably in the past 12 months. We see that in the chart of the day, which compares property loans to manufacturing loans. In 2017, China eased monetary policy substantially, and that created a tidal wave of property market speculation. That created all kinds of headaches for the Chinese regulators, not least including the threat of a really dangerous property bubble. So the Chinese have been at pains to lance the boil before it becomes really dangerous. The thing to watch in the Chinese market is not the big internet companies whose monopoly powers are being reduced, and not the property companies, which are going to take a beating, but small and up-and-coming manufacturing companies. Look at the CSI 500 index. There's an exchange-traded fund which duplicates its performance. That's up 18% year on year, and it reflects the basic objective of the Chinese government, which is shift investment away from low productivity investments like property into high productivity investments like manufacturing, particularly in the context of the fourth industrial revolution, the great wave of productivity that will be driven by big data, artificial intelligence, robotics, smart logistics, smart cities, and so forth. The Evergrande crisis accomplishes several things for the Chinese. First, as I mentioned, it pops a bubble before it gets too big to pop. Secondly, it cleans up a lot of political swamps because the property market has been a haven for local governments to mix greasy elbows with property developments and gives rise to a lot of corruption. Third, it shifts capital away from low productivity to high productivity sectors. And it also does something very important from the standpoint of Chinese policy. It reduces housing prices, which have gotten out of control. One of China's biggest problems is that the rewards to its enormous growth have been highly uneven. So the Chinese government wants to reduce property prices. So look for China's growth to be impacted only marginally by Evergrande, and look for the Chinese manufacturing sector, particularly up-and-coming companies, to continue to reflect the Chinese government's huge commitment to enhancing productivity and making China the leader in fourth industrial revolution technologies. This is David Goldman, Asia Times Deputy Editor in New York.